Well, the markets have certainly been interesting, if nothing else, over the past 3 weeks or so. As you might recall, last week, and I'll show you my cursor here. Hopefully, you can see my mouse. But last week, we were starting to see a turnaround off of the lows of the mortgage-backed security pricing, way down here. Started to bounce back up, and we saw some follow through since then. So we saw follow through come through as we saw improvements in pricing, improvement in rates over the past week. And then on Friday, the jobs report hit, and the jobs report numbers, at least the headline numbers, looked really good, like 339,000 new jobs added as opposed to the 180 some thousand that were expected. So, pretty big deal. Now, as you look closer to the numbers, it appears that most of those are people getting second jobs and things like that. So unfortunately, that does indicate a weakening economy, but the headline looked good. Although the unemployment rate went from 3.4 up to 3.7%. So mixed bag, right? A mixed bag in headline news there when it comes to the unemployment report. But that caused a bit of a drop in mortgage-backed security prices, caused a little bit of weakening. And then on Monday over the weekend, Saudi Arabia said they were going to drop production of oil by 1 million barrels a day, regardless of what OPEC was going to do, in a bid to make more money, right, move things forward. Some of that seems to be in response or retaliation to the United States' promise to replenish our strategic oil reserves after we drew them down over the past year and a half, and we have not kept that promise yet. We have not started to replenish those oil reserves. So Saudi Arabia is retaliating, probably rightly so, and that caused a drop in mortgage-backed security prices, although that clawed its way back throughout the day. But now today we're kind of stuck here at this same level. Dropped this morning and clawed back up because the Reserve Bank of Australia decided to raise their lending rate by a quarter percent overnight. So we're battling this Fibonacci level, this red line here, which is acting as a ceiling of resistance for mortgage-backed security prices. We really need to break above that in order to have any meaningful continued improvement in interest rates. So we'll be watching this closely. I'll keep you posted on other news and happenings as they occur going forward. We are expecting June's inflation report to be better than the year ago report, so year-over-year improvement, but not a major improvement. That probably won't happen until we hit July and then later in the summer, and hopefully that'll continue to encourage rates, of course, and the Federal Reserve to stop raising rates and long-term interest rates to continue to ease. So that's where we're at right now. If you have any questions about anything I've discussed today or want to discuss it in more detail, please feel free to reach out to me. And also a reminder to follow me on Instagram, where I put together some short reels about these topics and other money and mortgage related topics that may be interesting to you, or you may want to share with your clients as you move forward in the real estate world here this summer. So you can find me on Instagram at bill.z.mortgage.